Checked your score this morning? 480, 520, maybe lower. It hurts. It's not just a number. It's a reminder of every mistake, every missed payment, every night you couldn't sleep wondering how you'd recover. The world sees that score and decides who you are, whether you can rent an apartment, buy a car, even what interest rate you'll pay for years. But here's the truth. That score isn't permanent. And the fastest levers to fix it aren't what the credit industry advertises. The credit industry's revenue model often depends on consumers with damaged credit paying higher interest rates, more fees, and carrying balances longer. But the moment you understand how scoring really works and rebuild strategically, you stop being as profitable to them. Today, I'm showing you exactly how to fix your credit fast, step by step, using the strategies most people never learn. What's been the hardest part of trying to fix your credit? Drop it in the comments. Your story might help someone else take their first step tonight. Quick reminder. This is educational information about credit repair strategies, not personalized financial advice. Your specific situation may require professional guidance. Bad credit isn't a life sentence. It's data. And data can be changed, updated, and rewritten. When your score drops, whether from debt, collections, bankruptcy, or life falling apart, you're not starting over from zero. You're rebuilding a data profile. If you understand how that profile is calculated and what moves the needle fastest, you can fix it much quicker than most people think. Your credit score is built on 5 main factors: payment history, 35%, credit utilization, 30%, length of credit history, 15%, credit mix, 10%, and new credit inquiries, 10%. Most people try fixing one thing, paying off a debt or disputing a few items. That's like inflating one tire when all 4 are flat. To rebuild fast, you need to move all 5 levers simultaneously and strategically. The 3 fastest wins. Before we dive into detailed steps, understand what changes fastest. Correcting errors on your report, removed within 30 to 45 days. Timing payments before statement close, impacts score in one billing cycle. Authorized user on old account, often shows up within 30 to 60 days. Paid medical collections, all paid medical collections no longer appear. Many unpaid collections under $500 are now excluded by major bureaus. If you have small medical collections, check your reports. These might already be gone or can disappear quickly once paid. Step 1. Pull your reports and dispute every error. Go to annualcreditreport.com, the only legitimate free source. You can now pull reports weekly from all 3 bureaus, Experian, Equifax, and TransUnion. Pull all 3 and read carefully. 1 in 5 credit reports contains a significant error. Look for accounts that aren't yours, duplicate collections, debts past the 7-year reporting limit, incorrect balances, accounts marked unpaid that you paid, and bankruptcies that should have been removed. Bankruptcies can remain up to 10 years, though some types may fall off at 7 years. Identity theft. Note: if you see fraudulent accounts, file a report at identitytheft.gov. Immediately, place a free fraud alert or credit freeze, then dispute as an identity theft victim. This accelerates removal. Dispute every error. You can dispute online, but certified letters create better paper trails. Bureaus typically have up to 30 days to investigate, sometimes extending to 45 days if you provide additional documentation or obtain the report through annualcreditreport.com. After investigation, they have about 5 business days to notify you of results. If they can't verify the information with the original creditor, they must remove it. Results vary based on your credit profile and scoring model used. Here's your dispute template. I am writing to dispute the following information on my credit report: list item, account number, and why it's inaccurate. This item is incorrect, incomplete/outdated. I request investigation and removal. Enclosed are supporting documents. Please send written confirmation of results. Don't give up after one dispute. If an item is genuinely wrong and they claim it's verified, dispute again with more detail. Request their method of verification. Many items fall off on second or third disputes because creditors don't respond to repeated inquiries. Look for paid medical collections. Shouldn't be there anymore. Unpaid medical collections under $500. Many bureaus now exclude these. Check current bureau rules and your state's dispute procedures. Collections past 7 years from first delinquency, duplicate accounts, incorrect payment histories. Step 2. Build positive payment history. Immediately, disputing errors alone won't fix credit without current positive accounts reporting. Time helps negative items age, but you need active positive accounts now. Think of this as a data game, not a debt game. You're teaching the system new behavior. Get a secured credit card from a reputable bank or credit union. Secured cards require a $200 to $500 cash deposit that becomes your limit. Look for no annual fee or under $35. Reports to all 3 bureaus monthly. Path to graduate to unsecured card in 6-12 months, and avoid cards with monthly maintenance or program fees. Seek those that report to all 3 bureaus and can graduate. Use strategically. One small purchase monthly, pay off in full before statement closing date. Keep utilization under 10%, ideally under 5%. Within 3 to 6 months of perfect history, your score starts rising. Add a credit builder loan. $300 to $1,000 loans where the lender holds money in savings while you make monthly payments for 6 to 24 months. At the end, you get the money back minus small interest and fees. During those months, they report perfect payment history to all bureaus. Credit unions, community banks, and companies like Self offer these. Even with terrible credit, you'll likely get approved because the lender has no risk. Authorized user strategy. Ask a trusted family member with excellent credit to add you as an authorized user on an old card with perfect history. You don't need the physical card or account access. Their positive history gets added to your report, often showing up within 30 to 60 days. Choose carefully. If they miss payments or max out, it hurts your score too. The principle: one positive account helps. 3 to 4 accounts reporting perfect payment history for 6 months creates a compelling narrative of someone who's turned things around. This is where most people start seeing real movement, within weeks, not months. Step 3. Master utilization timing. Here's the strategy many don't understand. Your utilization is calculated on the statement closing snapshot, not the due date. Most lenders report your balance on your statement closing date, typically days to weeks before your payment due date. The hack: pay your balance down to near zero, 48 to 72 hours before your statement closes. When the lender reports on closing date, your balance shows near zero. Your utilization drops, and your score often improves within a single cycle. Results vary based on starting utilization, overall profile, and scoring model used. Find your statement closing dates for each card. Call customer service if needed. It's on your statement or online account. Set phone reminders 2 to 3 days before each closing date. Pay balances down as low as possible, then, ideally zero, minimum under 10%. Utilization is calculated per card and overall. Even if total utilization is low, one maxed card hurts significantly. Keep every card under 30%, ideally under 10%. Request limit increases every 6 months with on-time payments. I'm requesting a credit limit increase without a hard inquiry. Is a soft pull increase possible? Higher limits with same spending lowers utilization ratio, but don't increase spending just because limits increased. Step 4. Stop applying for new credit. Every credit card, loan, or car financing application generates a hard inquiry, dropping your score 5 to 10 points. 1 or 2 inquiries yearly won't hurt much. Multiple inquiries signal potential financial instability. When rebuilding, apply for 1 or 2 accounts maximum in 6 months. Get your secured card, maybe a credit builder loan. Then stop. Let accounts season. Exception: rate shopping for mortgages, auto loans, or student loans. Scoring models allow a 14 to 45-day window, depending on model, where multiple inquiries for the same loan type count as one. This doesn't apply to credit cards. Each application is separate. Avoid store credit cards offering instant discounts at checkout. These usually have terrible terms, high rates, and add hard inquiries. Skip them unless absolutely certain of approval and genuine need. You can dispute hard inquiries from identity theft or unauthorized applications. Step 5. Protect payment history at all costs. Payment history is 35% of your score, the biggest factor. One 30-day late payment can drop your score 60 to 100 points and stays on your report 7 years, though impact diminishes over time. Automate everything. Set autopay for at least the minimum due on every account, processing 3 to 5 days before due dates. Set backup phone email reminders a week before. Key strategy: set autopay for the minimum to ensure you never miss a payment, then manually pay the remaining balance before your statement closing date. This combines autopay safety with utilization optimization, the optimal approach. If worried about overdrafts, set low balance alerts, or maintain a small buffer, $100, $200, in your account that you treat as zero when budgeting. Late payments from the past age off after 7 years from delinquency date. You can't remove accurate late payments, but you can dilute their impact by building new positive history. After 2 years of perfect payments, old late payments have minimal impact. Goodwill adjustments. If you have 1 or 2 late payments with a creditor you've been with for years, call and request removal as a courtesy. This is rare and entirely at the creditor's discretion. Try this brief letter. I'm writing regarding my account ending in Heinz. I've been a customer for X years and have maintained timely payments except for date. This was due to brief reason. I've been current since then and respectfully request you consider removing this late payment reporting as a goodwill gesture. I value my relationship with company and am committed to continued responsible account management. Worth asking, worst they can say is no. Step 6. Length of credit history. Credit history length is 15% of your score. If starting over with new accounts, your average age is low. But you can work with this. Keep old accounts open even if closed. Closed accounts in good standing stay on your report up to 10 years, helping average age. Don't dispute them just because they're closed. Authorized user status may inherit the account's age. Not all scoring models count this fully, but many do. Don't close old accounts unless you must. An unused card from years ago? Keep it open. Use it twice a year for small purchases. Let it age. Be patient. This factor can't be hacked quickly. Time must pass. But as new accounts age from 6 months to 12 to 24 months, your score incrementally improves, even if nothing else changes. Step 7. Credit mix. Credit mix is 10%. Scoring models like seeing you handle different types, revolving credit, cards, installment loans, auto personal loans, possibly mortgages. When rebuilding, you might only have a secured card initially. That's fine. Over time, adding a credit builder loan diversifies your mix. Never take on debt you don't need just to improve credit mix. That 10% isn't worth unnecessary debt. Let this factor improve organically. Step 8. Deal with collections strategically. Collections significantly damage scores, but paying them doesn't automatically improve your score as expected. Older FICO models, like FICO 8, count paid collections as negative. Newer models, FICO 9, Vantage Score 3.0, 4.0, ignore paid collections, but not all lenders use newer models. Critical. Check statute of limitations first. Before paying or acknowledging old collections, verify your state's statute of limitations on debt collection. In many states, making a payment or written acknowledgement can restart the statute of limitations, giving collectors years more to sue. Don't pay or acknowledge very old debts without first checking whether doing so restarts the clock in your jurisdiction. Recent collections, under 2 years, hurt significantly. Old collections, 5 to 6 years, still hurt but much less. Impact diminishes as they age. If paying, settling, negotiate before payment. I'm willing to settle this. If I pay 30 to 50%, will you delete this from my credit report? This is pay for delete. Some collectors agree, though many larger agencies are bound by bureau agreements preventing removal of accurate information. Any deletion or reporting modification agreement must be in writing before you send money. If they refuse deletion, ask if they'll mark it paid instead of leaving it unpaid. If debt is time-barred beyond statute of limitations, collectors can't sue, though it stays on your report 7 years from first delinquency. Consider whether paying helps you. Under older scoring models, paying won't significantly improve your score. After paying collections, verify correct updates on all 3 reports within 60 days. If still showing unpaid, dispute with payment documentation. Step 9. Credit Repair Company. Reality. Most credit repair companies charge $50 or $150 monthly, plus setup fees, promising dramatic results. Reality, 90% of what they do, you can do yourself free. What do? Dispute items on your report. That's it. They send dispute letters, the same letters you can send using the Fair Credit Reporting Act. They have no special access, no inside connections, no secret methods. You can send identical letters for postage costs. $7 certified mail. The FTC has sued dozens of companies for promising undeliverable results, charging illegal upfront fees, long-term contracts with minimal results, advising disputes of accurate information, fraud, and failing to inform consumers of rights. Exception: complex identity theft cases or dozens of errors you genuinely can't handle might warrant consulting a legitimate consumer credit attorney. Many offer free consultations and work on contingency for FCRA violations. You're not paying $100 monthly. Ask yourself, can I pull my reports free? Yes. Identify errors? Yes. Write a dispute letter? Yes. Mail certified mail? Yes. Then you don't need to pay anyone. Save that $100 monthly. Put it toward paying down balances or building emergency funds. That improves your situation more than paying someone to send letters. Step 10. Understanding the economics. Here's a reality most people never think about. Lenders often earn more from customers with damaged credit. It's not evil. It's just how the math works. Why? Higher interest rates on everything. Annual fees, monthly maintenance fees, balance carrying generating interest income, occasional late payments generating late fees, overdrafts generating overdraft fees. Excellent credit holders, low rates, zero fees, pay balances in full, zero interest income. Rarely miss payments, avoid fees. From a revenue perspective, they're sometimes less profitable. This is why subprime products exist. $300 limit cards with 29.99% APR, $99 annual fees, $10 monthly maintenance fees. These target damaged credit holders with limited options. This is also why you'll see myths like carry a small balance to build credit or use 30% of your limit for optimal scoring. These are false. FICO and Vantage Score don't require interest payments. Accounts with zero balances or very low utilization provide everything algorithms need. Charge, pay in full, repeat. That's optimal. Carrying balances just costs you interest with zero scoring benefit. The industry sometimes benefits from you thinking recovery takes 7 to 10 years. While negative items stay on reports for 7 years, bankruptcies up to 10, their actual score impact diminishes significantly over time, with active positive history building. In practice, many people report going from low 500s to mid-600s in 6 months with consistent effort. From 520 to 720 in 18 to 24 months is possible with strategic consistency. But the system profits more when you believe you're permanently stuck, accepting unfavorable terms. The utilization timing strategy I explained, it gives you control over reported data. They'd prefer you use cards heavily throughout the month, reporting higher utilization, keeping scores lower, keeping you in higher interest products longer. Understanding you can manage reported balances by timing payments before statement close returns control to you. The emotional side. Damaged credit makes you feel ashamed, like a failure. You internalize it. I'm bad with money. I'm irresponsible. I'll never get ahead. I don't deserve better. Every denial or high rate reinforces this. Here's what you must hear. Your credit score is not a moral judgment. It's a financial metric based on past behavior that changes with future behavior. You're not a bad person with a 480 score. You went through something difficult. Job loss, medical debt, divorce, crisis, systemic stress, predatory lending, lack of education, or bad luck. And your score reflects that period. It doesn't define who you are now or will be. Rebuilding credit isn't about proving your worth. You already have worth regardless of what bureaus say. It's about changing data points for better financial access and opportunities. It's practical, not moral. You're rebuilding a number, not yourself. You're already whole. This matters because shame leads to avoidance, and avoidance keeps you stuck. Too ashamed to check reports? Can't fix errors? Too ashamed for a secured card? Can't build positive history? Too ashamed to ask questions? Stay uninformed. Replace shame with pragmatism. My score dropped because X happened. Now I'm systematically rebuilding using these strategies. That mindset creates action and progress. If financial stress has traumatized you, panic attacks about bills, collector harassment causing dysfunction, consider a therapist understanding financial trauma. This is real. Getting emotional support makes the practical side easier to handle. Your 90-day action plan. Tonight, before closing this video, go to annualcreditreport.com. Pull all 3 reports. You can do this weekly free. Write down every negative item: collections, charge-offs, late payments, high utilization, anything hurting you. Write down every error: wrong balances, accounts not yours, duplicates, items that should have aged off. Pick one action to complete this week. Send one dispute letter. Apply for one secured card. Find out statement closing dates. Set up autopay. Just one step. Week 2. Take your second action. Credit Builder loan application. Another dispute. Pay balance before statement close. One action. Week 3. Third action. Request authorized user status. Set calendar reminders for closing dates. Request goodwill deletion. Keep momentum manageable. Week 4. Review progress. What actions taken? What responses received? What feels different? Even if score hasn't moved yet, you're building the foundation. Give yourself 90 days of consistent effort. Paying before statement closes. Perfect on-time payments. Low utilization. No impulsive credit applications. Following up on disputes. After 90 days, pull reports again. Compare to day 1. You'll see progress, maybe modest, maybe substantial depending on starting point, changes made, and scoring model. Maybe 1 item removed, maybe 3 updated correctly. What matters? You're moving in the right direction, and the system is responding. In 6 months, you'll feel hope instead of despair. That stomach knot when someone mentions credit scores loosens. You see possibilities instead of limitations. Maybe you're not at 750, but you're at 580 instead of 490. That opens doors previously closed. In a year, you'll realize you did this. You rebuilt from ground up, one strategic move at a time. From avoiding reports to managing actively. From helpless to competent. It worked because you understood the system and executed consistently. Common mistakes that destroy progress. Mistake 1. Missing a payment due to overconfidence. 4 months in, score up, feeling good, you forget to verify autopay processed. Suddenly, 30 days late. That costs 60-80 points, undoing progress. Never get complacent. Autopay is insurance against human fallibility. Mistake 2. Maxing out cards again. Limits increase. Suddenly you have $5,000 available. Life happens. You max them out. Utilization shoots to 80%. Score drops substantially. Increased limits are tools for lowering utilization, not invitations for debt. Mistake 3. Closing old accounts. You pay off an old card, close it to simplify. Bad move. You reduced available credit, increasing utilization on remaining cards, and when it falls off in 10 years, you lose its age contribution. Unless a card has unaffordable annual fees or causes overspending, leave it open. Mistake 4. Impulsive applications. Department store offers 20% off for opening their card. That $60 discount costs points from hard inquiry and adds an unneeded account with probably terrible terms. Every application should be strategic and planned. Mistake 5. Ignoring reports after improvement. You hit 680, stop checking reports. 2 years later, applying for a mortgage, you discover an erroneous medical collection that's been there 18 months. Now you dispute, takes time, and might lose the house you wanted. Enable free alerts for changes, new inquiries through bureau apps or your bank. Check reports every 3 to 6 months forever. Mistake 6. Falling for scams when progress feels slow. 6 months in, progress exists, but feels slow. You see ads promising dramatic fast results. Don't. You'll waste money or get scammed into illegal tactics. Stick with legitimate strategies. Progress takes time, but is real and permanent. Understanding timelines. Realistic expectations. Starting at $500 to $550 with some collections/late payments but no bankruptcy. Implementing everything consistently. 620, 660 range within 6 months. 660 to 700 within 12 months. Breaking 700 within 18 to 24 months. Starting at 450, 500 with multiple collections, charge-offs, maybe bankruptcy. 580 to 620 in 6 months. 620, 660 in 12 months. 660 to 700 in 18 to 24 months. Breaking 700 might take 24 to 36 months depending on bankruptcy age and negative item quantity. Starting above 550, 580, 600, needing cleanup and optimization. 680, 720 within 6 to 9 months with focused effort. These assume doing everything right, disputing errors, building positive history, keeping utilization under 10%, never missing payments, not applying impulsively, letting time work as negatives age. Most important factor, consistency. Someone doing everything 85% right for 18 months sees better results than someone doing everything 100% right for 3 months, then falling off. This is a marathon. You're building lifelong financial habits, not temporarily gaming a number. What's next coming soon on this channel? Real credit comeback case studies. People who went from 480 to 720, 520 to 680. We'll break down exactly what they did month by month. What worked fastest, mistakes made, real timelines. You'll see this isn't theory, it's a proven system that works when you work it. Advanced strategies, negotiating pay-for-delete deals in writing, rebuilding after specific bankruptcy chapters, handling student loans' credit impact, preparing credit before mortgage applications, maintaining excellent credit permanently. What's been hardest about fixing your credit? What questions remain? What mistakes would you warn others about? Drop your story in comments. I read everyone. Your experience might help someone realize they're not alone. If this helped, subscribe and share with anyone struggling with credit. Resources below. annualcreditreport.com. Link, dispute letter templates, reputable secured cards and credit builder loan lists, progress calculators, FCRA links. One last thing. Screenshot your credit score today. Whatever it is, 480, 520, 590. Save it. Don't share if you don't want to, but save it. Because 6 months, a year from now, when your score has improved substantially, you'll want to see proof you did this. You took control. You rebuilt. Your credit score isn't permanent. Your financial identity isn't fixed. You're not stuck, not broken. You're rebuilding. Your comeback has already started. Right now. With this video. With the decision you're making to pull your report and take that first action, you are not your credit score. You're someone learning, growing, fighting, refusing to give up. The score will catch up to who you are. Next, I'll show you how to rebuild after bankruptcy, step by step with real case studies. But for now, start here. Pull your reports. Fix one thing. Tonight. You've got this.